Okay, picture this. You walk into a corner tobacco shop, maybe to buy a newspaper, and you walk out just 5 minutes later with a brand new, fully working bank account and a MasterCard. Seriously. No appointment, no credit check, zero chance of rejection. And this isn't some futuristic concept. Nope. This is the incredible true story of a company called Nickel. So a bank inside a tobacco shop? Yeah, I know, it sounds totally bizarre. But get this. This one kind of crazy idea ended up solving a huge problem that traditional banks had just, ignored for decades. And it built a company so successful that France's biggest bank eventually shelled out a fortune to buy it. And the process itself, it was just brutally simple. I mean, look at this. It was literally 3 steps. You show up with your ID, you pay a €20 annual fee, and boom, you get your MasterCard and all your account details right there on the spot. The whole thing took 5 minutes. That's it. Done. Okay, but to really get why a 5-minute sign-up was so revolutionary, we need to back up a bit. We've got to understand the problem Nickel was actually built to solve. We need to talk about the millions, and I mean millions, of people who were completely left behind by the whole financial system. So back in France, around 2012, the number was just staggering. We're talking about an estimated 3 million people who were either unbanked or underbanked. And these weren't criminals or anything like that. No, these were everyday people. Students, freelance gig workers, immigrants, or maybe just folks trying to get back on their feet after a bankruptcy. And, being unbanked, it essentially makes you financially invisible. It's like you don't exist in the system. I mean, think about it. Without an account, how do you get paid by your boss? How do you easily pay your rent or your bills? You're pretty much locked out of the modern economy. So the big question is, why did the big banks just say no? Well, it basically came down to a whole bunch of barriers. For one, they had minimum income requirements. Then they demanded mountains of paperwork. You had to schedule appointments weeks in advance. And really, at the end of the day, if your credit history wasn't absolutely perfect, you were often just labeled risky or unprofitable and rejected. Simple as that. Okay, this is where the story gets really good. The solution didn't come from what you'd expect, not another slick, digital-only app. No, it came from a really unlikely partnership and a truly genius idea about how to reach people. It was all driven by these 2 founders who were like complete opposites. On one hand, you had Hugues Le Bret. He was the ultimate banking insider, a former CEO who knew all the system's dirty secrets and flaws. And then on the other hand, you had Ryad Boulanouar, a self-taught tech guy, a total outsider who came up with this wild idea. What if you could open a bank account without ever stepping foot in a bank? And here's the thing. Their genius move wasn't trying to build a better app or out-tech all the other fintechs. Nope, it was physical. They decided to partner with this massive, already existing network of 38,000 French tobacco shops, which are known as tabacs. Right? But why tobacco shops? I mean, of all the places you could possibly put a bank, why on earth would you choose the local spot where people are just buying cigarettes and lottery tickets? It sounds kind of crazy. Well, this is where the logic is just brilliant. Think about it. First, these tobacco shops are everywhere. Every small town, every city neighborhood has one. They're also trusted spots in the community, and they're open late, even on weekends. But here's the kicker. The owners themselves were desperate for new ways to make money. And to seal the deal, Nickel gave the National Tobacco Shop Association a 5% stake in the company. Smart, right? So, okay, they'd identified the problem, and they'd locked in this perfect distribution network. Now it's time to launch the product. And what they launched wasn't just an evolution, it was a full-blown revolution that, you guessed it, took just 5 minutes. I mean, the difference here is just night and day. On one side, you have Nickel, 5 minutes, one ID, and you walk out with a MasterCard. On the other side, the traditional bank, you're looking at a process that takes weeks. You need pay slips, proof of address, all that jazz, and then you still have to wait for your card to show up in the mail. And Nickel was all about transparency, just a simple €20 fee compared to a world of hidden charges from the big guys. Their slogan just captured this whole idea perfectly. 100% useful, 0% toxic. And that was their big promise to you. It meant no overdrafts, so you could never accidentally go into debt, no loans, no hidden fees. It was basically banking stripped down to only the essential, most useful parts. And you know what? The market responded, like immediately. The growth was just explosive. You can see it here on the timeline. They launched in 2014, and by 2017, they had over 500,000 customers. By 2023, 3 million. It got to a point where a new nickel account was being opened every 30 seconds. Just incredible. But then, in 2017, the story takes this turn that absolutely nobody saw coming. A huge twist that involved one of the very giants that nickel was designed to, well, bypass. 200 million euros. That's the price that BNP Paribas, France's biggest bank, paid to buy a 95% stake in nickel. I mean, wow, the ultimate insider buying the ultimate outsider. And that right there leads us to the central question of this whole story. It's a real head-scratcher. Why on earth would a massive traditional bank, one that ignored these exact customers for decades, suddenly pay a fortune for the little startup that was serving them? Well, it really boiled down to three key things. First up was validation. Nickel had flat out proven that you could serve this market and make a profit. Second, BNP wanted their digital talent. They wanted Nickel's lean, super efficient tech team. And third, and this is a big one, that incredible distribution network. Think about it. Nickel had more physical locations than a lot of banks had branches. You know, this whole acquisition thing really helps us understand Nickel's true legacy, because surprisingly, it was never really about disrupting or destroying the old banking system. It was actually about creating something totally new right alongside it. There's actually a business theory for this. It's called nondisruptive creation. So instead of fighting tooth and nail over the same old customers, what they call a red ocean, you go out and create a brand new market, a blue ocean. Nickel didn't steal customers from BNP. No, they served people who were never going to be BNP customers to begin with. So what can we take away from this story? The lessons here are just so powerful. First, they challenged a huge assumption that the unbanked couldn't be a profitable market. Second, they partnered up strategically to get a totally unfair advantage. Third, they were ruthless about making their products simple. And finally, they proved that solving a real social problem can create massive economic value. Because really, at the end of the day, beyond all the brilliant business strategy, this is the real story. The human impact was just so powerful. We're talking about people who had been rejected for years, who could now just walk into their corner store and be treated with dignity. 3 million people were handed a key and welcomed back into the economy. And all of this leaves us with one final, pretty provocative thought. Nickel found a market with millions of customers that was just hiding in plain sight. It was a problem everyone else had written off as either unsolvable or just not worth solving. It really makes you wonder, right? What other forgotten problems are out there right now that are actually the biggest opportunities in disguise?